So again, welcome to today's presentation. I'm Dana Aragon. I am Workforce Development Director here at AGC New Mexico. And thank you for joining us today for this informative event that will help simplify and navigate the New Mexico tax reporting changes. You will hear from the experts who will offer specific guidance and identify resources available from the state. Speakers will explain the changes that were made to the state's gross receipts tax, compensating tax, and New Mexico employee withholding systems. Our moderator for our presentation today is Bobby K. Nelson, CPA. She has over 30 years of experience in federal and state income taxation. She prides herself on providing premier client service by working closely with her clients and helping them find paths to success. Bobby K's experience includes substantial time with Big Ten and large regional accounting firms. She is skilled in the taxation of partnerships, corporations, S corporations, and individuals. In addition to state and federal federal income tax planning and compliance services, Bobby K also has extensive knowledge of sales and use tax, or SALT, New Mexico gross receipts and compensating tax, federal and state incentives and credits, and property tax. So she'll be our moderator today. And joining us today, we have a panel of speakers. Our speakers today are Emily Oster. She will be our main speaker. She is the Deputy Secretary of New Mexico Tax and Revenue. And then Mark Chaikin, I believe I've said that name correctly, Director of Tax Policy for New Mexico Tax and Revenue. And they've got some of their staff here as well, and I'll let them introduce as they come up. So we will go ahead and turn it over to Bobby K.
Good morning, everybody. And we are very honored and lucky to have such great representation from the New Mexico Taxation and Revenue Department with us today to present to the construction community in New Mexico. And there have been a lot of interesting changes that have been made. Some of these have been coming for a while, but many taxpayers in New Mexico were not as aware as they probably should have been that destination sourcing was on the radar and was scheduled to start on July 1st. And in conjunction with those significant changes, the Taxation and Revenue Department upgraded and changed up their taxpayer access point TAP to accommodate the new changes and to hopefully simplify reporting requirements for New Mexico taxpayers. And really that's what the overriding intent is to simplify the tax reporting obligations of New Mexico's taxpayers, and also to put New Mexico on a more even playing field with other states around the country. We do pride ourselves on being a little bit different here in New Mexico, but from an economic development standpoint, that's not always a great thing. And it helps us better if our taxation policies and processes are a little bit more streamlined with everybody else around the country. And that's what these changes are intended to represent. So I'm going to go ahead and pass this on to Emily Oster. Emily, please take it away.
Thank you so much, Bobby K. and Dana, and thank you to the Associated General Contractors for having us this morning. We're very happy to be here. I see we're at 27 participants, which is a great turnout. We wish we could be there in person with you, and we hope that next time we'll be able to, but we're grateful for the virtual format to keep us all safe today. I'm going to just speak very briefly to introduce our team, and then I'll hand it over to the experts to talk to you about the details and share. We have a pretty lengthy presentation. I don't know if we'll get through all of our slides, but if you would like a copy of the slides, we'd be happy to provide those, and we can send those over to Dana to distribute. So just let us know. Dana, would you like folks to put in the chat if they'd like a copy of the slides? Great. Okay, please. So if you'd like a copy of the slides, please put your email address in the chat, and then Dana will get those over to you. All right, so my name is Emily Oster, and I am the Deputy Cabinet Secretary for the Taxation and Revenue Department. I'm also a certified public accountant. My background is partially in public accounting, and then most recently for the last decade or so in state government, and primarily in finance. I worked for the Department of Finance and Administration, working on the statewide CAFR, which is the statewide financial statements. Then I also worked at the state auditor's office and then at the public defender department as the chief financial officer. I joined the department in February of 2019, so I've been with the agency for about 2.5 years, and I'm just incredibly happy to be here with you today and to have this great team to introduce to you. So Mark Chaikin is our tax policy director, and he's an incredible resource. Mark has been with us for, I think, about 8 months, joined us in very late November of last year. We're thrilled to have Mark on board. Mark is an attorney with an LLM in tax and brings a wealth of knowledge to our department. We also have Aisha Mora with us today. Aisha is our audit and compliance director. And in addition to being a longtime employee of the department, Aisha has a strong background in IT. As many of you are probably aware, we are an IT-heavy agency. Our system, Gentax, is really the backbone of everything we do on the tax administration side of our agency. And in addition to keeping the system running and overseeing tax administration, Aisha has a staff of about 318 FTE. Not all of them are filled, but that's the full count of positions in Audit and Compliance Division, and those are located in 5 different offices throughout the state. The next presenter is Rustalina Escalante. Rustalina is our tax practitioner liaison. She works in Audit and Compliance Division with Aisha, and Rustalina has been with the department, I believe, the longest of all of us, over 20 years. Rustalina brings a wealth of knowledge in gross receipts tax and tax administration in general, and she is a dedicated resource who specifically works with tax practitioners who are encountering difficulties in getting things done through the department. So Rustalina is a great resource. If you haven't already met her, we're happy to have the opportunity to introduce her today. So with that, I will turn it over to Mark Chaikin. Actually, quickly, I'll just give you a high level of the topics that we're planning to present. Mark will be talking about destination-based sourcing, which Bobby Kay mentioned a little bit. We'll be going into more detail. And then we'll turn it over to Rustalina for a demonstration on filing in the new TAP system, and also a little bit about paper filing using the new forms. And then Aisha will talk about a program called Managed Audit, which is New Mexico's version of voluntary disclosure. And it's a great option if you think you might not be in compliance. You can come forward through the Managed Audit program, get into compliance, and if you are able to pay in full within 180 days, then you don't have any penalty and interest, which can be a huge benefit to the taxpayer and also to the department. So we're excited to talk to you about Managed Audit because we see it as a win-win for taxpayers and the department. So with that, I will turn it over to Mark to dive into destination-based sourcing, and I will get our screen sharing going here. Okay, everything look good on the screen share? Great. Okay, Mark, over to you.
All right, thank you, Emily. If you could already jump to the slide number 2 or even number 3. I think 2 is just destination-based sourcing. So good morning, everybody, and thank you again for attending. We hope this is helpful, but if you have further questions, there'll be email addresses and phone numbers that you can contact to get answers to your particular questions. So there was a big change in New Mexico law effective July 1st of this year that changes the sourcing rules for receipts for purposes of gross receipts tax and compensating tax. And these were passed by the legislature in the 2019 session. Some amendments were made in 2020. So this has been coming for a while. It's effective July 1st. We just adopted regulations as well. So the first question is, what is sourcing generally for purposes of GRT and compensating tax? And what that means is, how do you determine the correct rate to apply? Because in New Mexico, we not only have a state GRT rate of 5.125%, but local governments can also impose their own local option gross receipts taxes. That's mainly counties and municipalities. So depending on where your receipts are sourced to, there can be a different tax rate, depending on the municipality or county that those receipts are sourced to. And sourcing is a technical word in the tax world. So up until July 1st, New Mexico used what's generally called origin-based sourcing. Those rules are contained in the older versions of the statutes and regs that I've cited in this slide. And what that meant is that generally, and this presentation will, of course, focus mainly on the construction industry, but for most receipts, not construction receipts, but for most receipts, they were sourced to the place where the business was located. And I'll tell you what the old rules were regarding construction and what the new rules are regarding construction during the course of this presentation. Those sections of the statute and administrative code were repealed and replaced effective July 1st, 2021. Next slide, please. So what is destination-based sourcing? As opposed to origin-based sourcing, for the most part with destination-based sourcing, you would look to the place where tangible personal property or the product of a service is delivered. So that's what destination means in this case. It's where is the tangible personal property or the product of the service delivered. There's lots of exceptions. I'm not going to get into a lot of them. I'm, again, just going to focus on what's relevant, I hope, for this audience, which is construction. Next slide, please. Why switch to destination sourcing? This is a big change, and it's created complications, and it does create some burden on taxpayers. Well, of all the states that have adopted some sort of sales tax or gross receipts tax, 35 have already adopted destination sourcing, I believe. I could be off by one there, but New Mexico is the 36th. It makes us economically competitive to do this, as Bobby Kay referred to. And it also makes sense because of changes to nexus rules, nexus being whether the state has authority to tax a particular person or corporation or other entity that has receipts that can be sourced to New Mexico. So those rules changed recently in 2018 due to a change in the law coming out of the United States Supreme Court. It's complicated in the time that I have here. I'm not going to get into details, but suffice it to say that now New Mexico can tax businesses that have no physical presence in New Mexico, but that have sales into New Mexico, either of tangible personal property or of the product of their services. Next slide, please. So again, New Mexico changed its nexus requirements to conform to the US Supreme Court decision. It's called the Wayfair case. In tax world, this was a big deal. It formerly was the case that a company had to have some sort of physical presence in the state in order for the state to be able to impose gross receipts tax on their receipts. That's no longer the case. Now the test is how much sales did that company have into New Mexico in the previous year. And if they had at least $100,000 worth of sales, then New Mexico can go ahead and tax them. So under the old law, we wouldn't have been able to reach certain sellers. Destination sourcing now evens the playing field between in-state and out-of-state sellers. Under the old pre-Wayfair rules, out-of-state sellers actually had an advantage because they paid no or lower tax on their receipts. And so it was really to customers' benefit actually to use services like Amazon rather than going using either ordering online from a New Mexico-based business or going in person and purchasing from a New Mexico-based business. So that was a bad situation. Lots of states were facing it. And that's destination sourcing allows us to even the playing field and make New Mexico businesses equally competitive with out-of-state businesses. Next slide, please. So section 7-1-14 sets out the changes to destination sourcing, and the regulations that I'll be referring to supplement but do not and cannot change the statute. We've had some questions about whether we could make an exception to certain activity through regulation. The answer is we cannot. We are bound by the statute. We cannot. We have no authority to go beyond what the legislature has authorized in the statute. Next slide, please. So there are 5 different categories of receipts under 7-1-14. There are transactions involving real property, sales of tangible personal property, leases of tangible personal property, franchises, and services. Services are the most complicated. I'm just going to discuss today the special rules that are applicable to certain real estate transactions and to construction. So next slide, please. So real property. Under the old law, transactions relating to real property are sourced to the location of the real property. So old section 7-1-14D stated that for sellers of real estate, the location of the real property sold is the place of business. Leases of real property were treated differently. Lessors used their business location. So if I were based in Albuquerque, but for example, I was leasing some property in Rio Rancho, I would still use my Albuquerque location to determine the correct rate of tax, which would be the state rate plus the local options imposed by the city of Albuquerque and Bernalillo County. That will now change under the new law. Receipts from the sale, lease, or granting of a license to use real property shall be the location of the property. So sales of real property are going to be sourced the same way they always were, which is you look at the location of the real property. Leases of and licenses to use real property are now also sourced to the location of the real property. So that's more consistent now. That is a change for leases. Leases formerly sourced to your business location, now being sourced to the location of the real property. So in the example I just gave you, the lessor of the real property, although their business might be located in Albuquerque, if they were leasing property located in Rio Rancho, the correct rate to use is now the Rio Rancho rate. I will tell you a little bit later, and Rosalina will get into this, I think, a little bit as well, about how to determine what that rate is. Next slide, please. So for services related to the sale of real property, the receipts are also sourced to the location of the real property, and there's a citation there. They were formerly sourced to the location of the realtor's business. So if I'm a realtor and I get a commission, formerly that would be sourced to the location of my business. So again, if I were a realtor operating out of the city of Albuquerque but selling property from the city of Rio Rancho, formerly I would have used my Albuquerque location. Now I'll use the Rio Rancho location to determine the real correct rate. Next slide, please. So this, I think, will be the meat of what is most interesting to this audience. So under the old law, receipts from construction were sourced to the place where the construction project is performed. Under the new law, receipts from construction and construction-related services performed for a construction project are sourced to the location of the construction site. So there is essentially no change from prior law. When you're engaged in a construction project, the place where the construction project is performed, or the location of the construction site, and I do think those things are the same, is going to be the location that will determine the correct gross receipts tax and compensating tax rate. Essentially, no change from prior law. This also applies to the sourcing of deductions, and Rosalina will be getting into that a little bit. She'll be showing you how that works. But if you have an applicable deduction, you will also source it to the construction site, or the location of the construction site. Next slide, please. Construction and construction-related services are defined in Section 7-9-3.4 and Section 7-9-52 and the regulations under those sections which were cited. It's important to note that Section 793.4 has also been amended effective July 1st, 2021, and it significantly changes the definition of construction-related services by including more services, including things like architectural services, engineering services, other services related to the construction. It does still exclude some services, but just general business services. And as it says in the statute, those will be legal or accounting services, equipment maintenance services, and real estate commissions. Next slide, please. So there are special rules for certain construction-related services. And this appears in the regulations. There's a citation there, 3.1.4.13, and a bunch of letters and numbers after that. So write that down or get a copy of the slides if you want to have a look at that. But it does make clear that there's a difference between architectural, engineering, surveying, and other services that are provided as part of an overall construction project, and then architectural services, et cetera, that are standalone. So if I were to come to an architect and I were to say, you know, I just need some plans for a building. I don't have a construction project going yet. I'm just hiring you to create some general plans. Those would be sourced in one way. But if you have an overall construction project that is going to include architectural services, engineering services, et cetera, those are going to be sourced slightly differently. So there's a distinction in the regulations and the statute, and I'm not going to get into this in too great detail, but there's a special category of services, professional services, that are sourced one way, so long as they are not considered to be in-person services. The distinction isn't too relevant here between in-person and not in-person, but the bottom line is that if architectural, engineering, surveying, and other services are part of a construction project, they will be sourced to the construction site. If they are standalone, so you just want a survey of a piece of land, it's not part of an overall construction project, and you just want a survey of that land, those receipts are going to be sourced to the business location of the service provider. So there is a distinction there. We're seeing how this plays out. The regulations we have, again, finalized, and they are in effect. But the regulations are an ongoing process. So we welcome comment and feedback from you so that we can make the regulations better and work for everybody within the constraints that are imposed by the language of the statute. So if we get comments and we can do something about it, we'll be happy to do that. If we feel that we can't because we're constrained by what the legislature has decided, then we'll let you know that as well and say, sorry, we can't do that without a legislative change to the statute. But we do welcome your feedback, so we can also suggest to the legislature, if necessary, changes that might be required to the statute. But so this is the one complication that I see for construction-related services. Again, almost all construction is going to be sourced to the construction site. And it's only if there are some of these standalone services that may be sourced back to the business location of the service provider. Again, only if they're standalone, if they're not part of an overall construction project. Next slide, please. Finally, I just wanted to mention leases of tangible personal property. So for some of you folks who are engaged in construction, I know you may lease equipment, for example, that is for part of the construction project. So that will be the location of the primary use of the property. Primary use means the place where the tangible personal property is used the majority of the time. So again, for most folks, I think that will be the construction site. If you lease a piece of heavy machinery that you need to use as part of your construction project, that is most likely going to be sourced to the construction site because that will be the location of the primary use of the property. Primary use is not altered by occasional or intermittent use of the tangible personal property at a different location. And the seller is entitled to rely on information provided by the purchaser or the lessor in this case, lessee in this case, of available in the seller's business records. But for the most part, you will be telling the person providing the equipment where to deliver that equipment, and the seller will then be entitled to rely on that information to determine the correct location and to determine the correct gross receipts tax or compensating tax rate. Next slide, please. Finally, the reporting requirements. Sellers and purchasers subject to the compensating tax must use the correct destination code when reporting gross receipts. The GRT is a tax on the seller, and you do have reporting requirements in the statute, and you are required to use the correct destination code. Now, if the incorrect destination code is used, we would ask that you file an amended return. But I just wanted to let everybody know that errors in coding do have knock-on effects on local governments. So when you use the location code, that lets the Taxation and Revenue Department know which local government should be getting that revenue. So when you file an amended return and say, oh no, the location code was wrong, that means one local government will be losing revenue and a different local government will be getting that revenue instead. And for budget purposes, for large items, of course, this can have a very serious effect on local government budgets and on their revenues. And especially for some smaller communities, we've seen very serious effects where even sums that may not appear that large, maybe $5,000, maybe $15,000 or $20,000, can have a large impact on local budgets, especially of smaller communities. So we do ask that you work with your professionals to try to get the correct location code down in the first instance. Again, you can amend returns if you find that you've made an error. And as long as you've paid the correct amount of tax, because again, if the local rate in the correct reporting jurisdiction may be the same as or lower than the incorrect rate that was initially used. So there won't be interest and penalties, but there is a very negative effect potentially on the local government. So that's really an ask on our part that you take care and that your accounting professionals take care to use the correct location code when you are doing your gross receipts tax returns. And with that, that's a good transition to Rusvalina to start to talk about how to do that correctly. So thank you.
Thank you, Mark. We'll go ahead and get started with how to file a return and make a payment. Next slide, please. So today's topics will be, I'll be talking about the gross receipts tax return and the designated vouchers, the list of deductions, and there will be a demo on how to file a return and to make a payment online or through TAP, and then also a paper return, how to file a paper return. So this is the new gross receipts tax return, and this is the associated voucher that you'll be filling out if you'll be doing on paper. Also, one other thing I would like to emphasize is that all the new forms that have been created will have a designated voucher. Next slide, please. So just to focus on what is new on the gross receipts tax return. As you can see now on the top where it says New Mexico Business Tax Identification Number, this was previously referred as the gross receipts as the combined reporting system known as the CRS-ID number. On this form as well, beneath the business name, we have new or change address checkbox. This will allow you to change your address or update your address to the department with the department. And if you need to make any changes for any other business accounts, I do recommend that you do submit the ACD 310115, the business tax registration update, as we refer as the BTRU. And to the right, you'll see amended returns. This is also new. If you are amending, make sure you are fill out the return as it should be originally filed. And if you fail to check off the amended box, this will cause processing errors, and the amendment return will not be posted or will be rejected. What's also important is if you're amending your return and it results in overpayment for your account, you must submit an RPD 41071, the application for refund. In order for the department to validate the overpayment and to issue the refund, will require documents to be provided. And the other thing that's new is also this column E, the deduction code, and I'll talk specifically about that. And on the bottom here, we also see that there's credits that can be applied. Please refer to each of these credits and the schedules for better guidance to see if they apply to you. And on the bottom, oh, that's okay. Go ahead. Let's go ahead and go with the deduction codes. So with the deduction codes, now we have two types: the required deduction code that you'll be reporting separately, and this is required to be reported by statute. And then we have the optional deduction code, which is optional, and these are statutory referenced. Next slide, please. I do want to emphasize that the gross receipts and the deductions associated with these amounts are to be reported separately. So we have a couple of tables. So here we have the first table is table 2, T2, If you're going to be reporting out-of-state codes, make sure that you do use the appropriate code. Next slide, please.
Excuse me, I lost my audio. I apologize. Risolina, are you ready for the next slide?
Yes, please.
There you go. Sorry about that.
No problem. And then we also have table T3 and table T4. T3 is the special code rate. And here what we could find on these, which is your medical food and the hospital, sales for a nonprofit hospital. Many of these will not be applied to the construction industry, but I thought it was important for you to be aware that there are special codes and why they're considered special. Next code. Next slide, I mean. And then here, this is the list that is very important here. So this is the required deduction code, and it's the T5. These are required deduction codes. There are 23 of them. And as you can see, they do start with the D0, and they are emphasized by, by numbered 1 through 23. If they apply, then you would be using these deductions. Now, the optional deduction code, as you can see here, it says not required to report. These deduction codes are not required by statute, but are referenced statutory and are not required by statute, but we do prefer that you do provide, because this can assist the department in processing your return. So here's your optional code. So we have here on table T6, page, if you look at the instructions of your filer's kit, page 15 through 19, you will have a list of codes. Let's look at code G0999. It says here, if you're unsure of the deduction code, you may use this code as well. The deduction code below are not required, but however, you can use the G099 if the deduction code is not listed below, or if you just choose not to report. Go ahead and next slide. So we're going to be demoing how to file online. And I wanted to share with you what are the benefits of filing electronically. The department does encourage you to file electronically whenever possible. Filing electronically is fast, safe, secure, and it provides many benefits. One of them is it's free. You can file for free. You can file and pay your returns and request a refund. And you could also view letters and many other options. So we'll go ahead and move forward with playing the demo.
Accounts. As you can see here, we currently have gross receipts tax account and a wage withholding account. These accounts may vary depending on how your account is currently set up, meaning you will have more or less accounts displayed. As you can see on the right, you are able to file a return, make a payment, request a refund, file, view, or amend all returns, as well as manage NTTCs and account information. The main screen will show all taxpayer accounts, including business taxes and any other filing obligations, such as corporate income tax, workers' compensation, and others. In this example, the taxpayer is only going to be filing for gross receipts tax. We're now on the gross receipts tax return, and you can see here that we do have import return. This section here will allow you to import a return if needed and to upload it in Excel format. For practitioners, you can still upload a bulk file for multiple GRT returns. The file format has changed, so you should look for the new format and instructions on the TAP website. Now below, you can see it asks you if you have gross receipts tax to report. In this example, we're going to go ahead and select yes. Once you select yes, you'll be greeted with, do you have any deductions or special rates to report? If you have deductions, you want to go ahead and select yes. If you don't have any deductions to report, you can go ahead and select no. We're going to say yes as we're going to show deductions in this example. Now you can see we can add a location for the gross receipts tax. So we're going to go ahead and select that to add our first location. Under add location, the first question that comes up, they want to know if the location is outside of New Mexico. For these examples, we're going to go ahead and say no. But if you do have a location outside of New Mexico, you want to go ahead and select yes. Next is the county. For our first example, we're going to go ahead and select Santa Fe as our county. And our location, we're going to go ahead and select Santa Fe again. Now we need to enter our gross receipts tax. For this example, we're going to enter 15,000 and our deduction code. Here you can see a list of deductions, anything from manufacturing, Medicare, construction, and sales or lease of real property. There's a long list of deductions here, so you might want to find the one that is listed for you. If you want more information on deductions, you can see our FYI 105 under the forms and publication on our tax.newmexico.gov website. For this example, we're going to go ahead and select the 7-9-52 construction and related services. For those in the past that have used this type of deduction, this would be our non-taxable transaction certificate, type 6. We'll go ahead and select that one. Next, we need to enter our deduction amount. In this case, we're going to put in 15,000. And as you can see here, our gross receipts tax due is 0 due to our deduction. We're going to go ahead and select add to complete that transaction. We've now entered our first location. We need to enter a few more. So let's go ahead and add location. For this example, we're still going to continue with no, that we still have a business in New Mexico. And we're going to select our county again. We're going to go ahead and select Santa Fe one more time. And Santa Fe again. And now we'll enter our gross receipts amount and our deduction code. For this example, we're going to select the 7-9-51, which is also a type 6 NTTC. Now we're going to enter our deduction amount of 5,000. This leaves us a tax due of 1,265.63. Let's complete that return. Now we're going to add another location. For this one, we're going to select Bernalillo. And our location as Albuquerque. Let's enter our gross receipts of 25,000 and our deduction code of 7-9-52, construction and related services. Next, we'll enter our deduction amount, 10,000, leaving us a gross receipts tax due of 1,181.25. Let's complete that return. We now have 3 returns currently set up. We need to add one more return. So let's go ahead and add location, select our county. In this case, we're going to select Los Alamos and our location. Let's enter our gross receipts tax amount of 2,000. For this return, we currently do not have any deductions. Those deductions will be made later through an amendment. We're going to assume that the taxpayer currently does not have any deductions. And if you'd like to see that amended return, you can see our other video. As you can see here, gross receipts tax due is 146.25. So we're going to go ahead and add that return. As you can see, we currently have 3 deductions that have been selected. For a list of deductions you may qualify for, please visit tax.newmexico.gov website and select Forms and Publications. The deductions will be presented under FYI 105. This will allow you to see if you qualify for any of these deductions that we have. Let's go ahead and select Next to move on completing our return. We're now presented with the business credits, and it's asking us if we have any to claim. For this example, we do not, so we're going to go ahead and select No. We're going to go ahead and select Next. And now we have the summary page. As you can see on the summary page, it's going to show us the total gross receipts tax due and any refundable credit claimed. Below, you have the signature to declare if everything was true and correct. We're going to go ahead and say yes. Now we can submit our return by clicking Submit. And click OK on the confirmation. We now have our confirmation page. This will show you the period that you just filed for, the confirmation number, which would be used to get in contact with the department if we need to locate your return. Also, it's going to explain the date submitted, the account type, the account ID, as well as the total amount due. You can see if you have any more general questions, you can call this number, or you can contact us to this email listed here. Keep in mind when contacting the department for assistance, you'll want to have your name, phone number, email address, tap logon, FEIN or social security number, tax type we can assist you with, and detailed description of your issue. This will help speed up the process. Now that we've completed our return, we need to make a payment. So let's go ahead and select Make an e-payment. Once you select Make an e-payment, you have 2 options, credit card or e-check. We're going to go ahead and select e-check for this example. Once we've selected e-check, we have a few options, checking, savings, and we need to enter in our routing information. This time we'll go ahead and enter that in. As you can see, our bank name now came up. And now we need to enter in our account number. And confirm that number. Below here, you can save your payment channel for future use. We're going to go ahead and select yes. This means that every time that you come back in to make another payment, all the information will be pre-populated for you. See the note below if you have a debit blocker on your checking account allowing only pre-specified businesses to debit your account, you must contact your financial institution and the State of New Mexico company identification number listed here before your electronic check can be accepted. If your bank rejects your electronic payment, you'll be subject to penalty and interest. Now that we verified that, there's a few return types that you can select. You have an amended return payment, assessment payment, audit payment, and return payment. We're going to go ahead and select the return payment. We have the period that we're currently filing for and the payment date. We're going to go ahead and change this payment date to the due date. So ensure that our payment gets posted on the day that it's due. We now have the current balance that needs to be paid. Here's the amount, and we just need to confirm that amount. Now that we've confirmed the amount, we can go ahead and select Submit. Now we need to just enter in our code, complete the payment. Once the code is entered, you're now on the payment confirmation page, just like the return confirmation page. This also lets you know the period ending that your payment has been submitted for, as well as the confirmation number that is useful if you're getting in contact with the department to locate your payment. As you can see here, it does specify your account type, account ID, the amount paid, and the date of the payment. Also keep in mind, if you made an error on this payment, it's not too late to make a change. While the payment is still pending, you can return to your account, view the submissions, and delete it before making a new e-payment. E-check payments are typically processed at 6:30 p.m. on business days. At this point, we have filed our return, including deduction, as well as our payment. Once logged in, you will be greeted with the summary screen.
I think it's back to you, Rosalina.
Hey, thank you. So now that we saw how to file online, I do want to emphasize that if you have an electronic filing requirement, you must file electronically. Please see FYI 108, electronic filing mandated for more information. So let's go ahead and go to the next slide. So I'm going to follow the same example as it was e-filed. So as you see here, we have column A through column I, and column A will remain the same. So we'll go ahead and enter in the municipality and the county name. And we know what the municipality and county name, and we know what the tax rate will be. So if you want to go ahead and click again, and that will give us the location code and the tax rate. So we know that they took the deduction codes of 7-952, which are construction related. And if you don't know what code you should use, I do recommend, if you have any NTTCs, I do recommend to look on your NTTC. It is on fine print. It does say what reg you're referring to. So just for your information, you could do that. And if you don't know, you know that you are can claim a deduction, but don't know what code. Always remember you have that the G0999. So go ahead and do one more click. These are the gross receipts that they reported excluding tax. And so it's going to be D minus F. And so you have the deduction codes, which equal G, which is the taxable gross receipts. And you multiply that by the tax rate and to report your taxable due. After you do that, you're going to add up all your totals. And this is the amount that is due. You're going to go ahead and sign, print, and put your title and date. And that's exactly how you'll file everything online on paper. So if you're filing it there on paper, the next thing we'll do is fill out the voucher. So this is the voucher. As you can see here, it says GRT-PV, which is the payment voucher. We'll go ahead and click, and it'll populate everything for you. So we just finished filing for the period of July 31st of 2021, and we entered all the information. They're a monthly filer, and that's it. But if you need any assistance, yeah, go ahead. We'll go to the next slide. If we need any more assistance concerning your gross receipts, please email the grt.trdhelp@state.nm.us. If you have questions regarding withholding, this is the email that you will contact them. And again, if you have questions regarding the workers' compensation fee, this is the email as well. And if you need assistance with TAP, let's say you got stuck or you can't find a certain button, you could always reach out to tap.technicalhelp@state.nm.us. Along with all that, we'll go ahead and click on the next slide. You could also email me with any questions. So, I thought that was the next slide. So sorry, I apologize. With any questions, and I will share my email I think it's the last slide that we have. So I hope we were able to answer all your questions regarding how to file. And I'll go ahead and turn it over to Aisha. Thank you, Emily.
You know what? Do you mind if I ask a few questions, as long as we're on that
Yeah,
section?
great.
Okay, so and actually some of these questions I received yesterday from clients. And so one of them was about the deduction codes, and that because that's new. And so I think one of the points, and you guys correct me if I'm wrong, when the legislature creates a new statute or modifies a statute that permits a deduction, many times they put something in the language of the bill and in the statute that says, hey, tax department, we want you guys to tell us how useful this has been and how much money it's costing the state. So you need to gather that data. And so my assumption is that tracking these deductions by code is helping the department gather that data. Is that correct?
Aisha,
Yeah, and I'll take that. Yes, that's correct, Bobby K. It's for basically for the economists who work in the tax policy office, so that we can develop information to let the legislature know whether a deduction is effective and achieving its intended purpose, or even used. The legislature does pass some deductions that just don't get used. So this is old data that is useful to the legislators to make policy.
Okay, thank you. Yeah, sometimes, I get a lot of questions about why, and in addition to how do I do it, they want to know why am I supposed to do this? And so that kind of information is helpful. The other piece for this particular audience, and I get this question sometimes too, is on subcontractors. If I'm a subcontractor, which one of these deduction codes is going to be applicable? So it would be for the statute 7-9-51 for materials. So it's not just materials, subcontractors are also under there, correct?
Actually, the type 6 is a combination of 7-952, which is construction services,
Right.
and then 7-951, which is construction material. So it's used dual. So
Well, but if you're a subcontractor who does construction, and you're not a construction related service, subcontractors have traditionally filed under 7-951, is that right? Or would they be materials or construction related services?
construction related services, but if they don't, then yeah, it would be construction related services.
Okay, well, that's good. See, that's I imagine that's really good information. Now that we need more detail when we're filing returns. And for business credits, so some people in our audience may not ever see a business credit, but examples of those, just for clarification, would be if you had a manufacturer's investment credit, New Mexico high wage tax credit, some of these different kinds of tax credits. That would be an example of when you would fill in information for that. And in your TAP, especially if you're using TAP, you would be able to pull information directly from that system to support that credit amount. And I guess there was a question in the chat asking about state cost segregation and what code would you use. I think it would be dependent on whether the project is a nonprofit project. Both of these use an NTTC type 9 or I guess the type 17 if you're choosing to do the type 17. But most of these fall under the type 9, so you would look to whether it's a nonprofit project or a governmental project and use that applicable deduction. Is that correct?
That's 7954 or 7960.
Yes. Okay. And then I also wanted to remind people about Speedy. You guys want to talk to Speedy and how he can help you if you're filing?
And on cost seg, Bobby K, in FYI 105, there's a section on page 18 and 19 about construction related deductions. It doesn't specifically address cost seg, but it does provide information about deductions that are commonly used for construction.
Perfect. Thank you, Emily.
Sure, absolutely. I don't think we have a slide in this presentation that shows the new homepage for TAP. Speedy is our e-services assistant. So it's basically a chat bot, and it's available on the homepage in the upper right corner. It looks like a Roadrunner. And I can go ahead and pull that up on my end here. And when Aisha's finished with her materials on managed audit, I can take you to the actual TAP login screen and we can show Speedy, and we can even ask Speedy a question and see how it does. So I think it's a tough one. Okay, I'll get it pulled up. We can demo that after we finish with managed audit. I just want to acknowledge we're almost at time here. It's 8:58, so I think we're happy to continue, and we do have additional materials that we haven't covered. But I know you're all very busy, and if anyone needs to drop off, our feelings will not be hurt. Let me just look quickly to AGC and confirm. Is it all right for us to keep going?
Yes.
Okay, great. Thanks, Dana. Okay, so I think it's over to you then, Aisha.
Wonderful. Thank you for doing such a wonderful job, Rosalina and Mark and Emily. I just really want to talk about, go ahead and do the next slide, please, Emily. Managed audit and its importance to the agency and how it really ties into our vision statement. And so our agenda here is tying managed audit back to our vision statement, talking about how it fits into our compliance continuum. What is a managed audit and how does that improve voluntary compliance? What is eligibility? What is the application process, the agreement, and the entire process? Also some resources you might not have and some questions. And I understand we're at time, so I'll try to move through it pretty quickly. If there's any questions, please let me know. Next slide, please. So managed audit really is an embodiment of our 3-year vision, right? It empowers customers through outreach and education and helps promote compliance, offers a flexible and secure solution to improve the customer experience. And that's, really living our vision statement is what managed audit does. It's a long-term program, but it fits perfectly within this administration's vision statement. Next slide, please. The compliance continuum for us is something we've really been working on the last few years for both the taxpayer and the department alike. As you move to the right of compliance into fraud and litigation, it's risky and expensive. Audits and collections, I'm sure this industry is no stranger to how challenging audits are and how difficult collections are. So really our focus has been pushing to the left of this continuum to promote voluntary compliance, to promote education, as we're doing here today. Mark's presentation and Rosalina's presentation are great examples of how we are trying to do that and trying to stay to the left and stay out of the right. Also including, changes to processing, as you saw in the video, and in Rosalina's example. I also want to remind you that we still have the bulk file option as well. So if, I recognize that adding the deductions probably is a little bit cumbersome. So we do still offer for individuals that want to file in bulk that process, and that is probably a little faster if you don't have the time to step through the process in detail. We've been doing a lot of campaigns for managed audit through outbound calls. So if you've received an outbound call for us, we've really been trying to promote this program. So what is a managed audit? A managed audit is specified by NMSA 1978 section 7111.1. Next slide, please. It allows essentially the taxpayer to audit themselves on a specified signed agreement. It's a variation of a field or desk audit. If you've ever been, a recipient of one of our managed audit offer letters, we've reconstructed records using third-party data, and we're recommending you come into managed audit. Many years ago, we didn't used to allow you to come into managed audit if we identified it first, but we started offering for those smaller matches, like Schedule C matches, managed audits, and most recently, we've actually started offering it for field audits as well. So that's a huge change for us, and we'll talk a little bit more about that at the end. It's really just your opportunity to come forward and voluntarily declare unreported or underreported income. If you're not sure of what deductions you should be using, or you're not sure, how the NTTCs are functioning, this is a great opportunity to work with the auditor one-on-one with your own issues, reviewing your documentation and getting you into compliance. And the biggest benefit to the taxpayer is that you avoid assessment of interest if you pay it within 180 days, and you always avoid a penalty in a managed audit. So it's a huge win to the taxpayer. Next slide, please. A managed audit is available for all tax programs. Of course, the top tax programs are listed here, and these are the ones that we see the most, but we do offer it for the smaller tax programs as well. So who is eligible? Like I said, we had some tighter eligibility requirements in the past, and we've changed that a little bit. Next slide, please. So really, to be eligible, you have to, complete your documents, have them ready to be available. Managed audit cannot apply to any existing liabilities, so it has to be returns that haven't been filed, or anything that hasn't already been established. It's really intended to keep a taxpayer into compliance. If you're already to the right of that continuum, that follows a different treatment stream. Again, if you've been involved in fraud or litigation of criminal investigation, you would not be eligible as well. And that you haven't been notified or selected for audit by the department. The only caveat here is we are offering this at the beginning of a field audit now. So that's a great change for us, and we're really looking forward to positive response there. Next slide, please. So the application process is pretty easy. As Rosvalina said, we encourage you to use TAP to apply, because TAP really gets that work to our employees faster. We are still taking paper applications. You can fax or email your applications, but it just is a little bit slower. This automated function we have through TAP helps us service you in the most efficient manner. And if you receive a managed audit offer, go back, Emily, you complete the agreement, which is kind of pre-filled for you already, and then you bypass that whole process. Next slide, please. Here's a screen. We did include a screenshot of TAP. These are beautiful Santa Fe mountains that we're also very proud of, and Speedy at the top right corner is our famous little Roadrunner support gentleman who's helping us help taxpayers every day. So as you could see, it's much more user-friendly, and it's also mobile friendly. Next slide, please. Some other notes from application is, New Mexico does not have voluntary disclosure agreements. We do manage audits, as the Deputy Cabinet Secretary stated. The taxpayer or representative can call the managed audit hotline anonymously and not even apply, and just ask some general questions. It really, helps the taxpayer navigate through whether or not they should apply. We won't penalize you just for asking questions, but it's helpful if we can review documentation, because then we can really understand your specific scenario. Sometimes generic questions don't allow us to have the exact examples, and it's hard to make a general assessment of just a general question. Do not submit your returns for processing for the periods. If you do that, it will cause delays. Allow the auditor to work with you on what the next steps are. And just make sure that all of these items are complete and the tax program is selected, and we'll review and process within 30 days. Next slide, please. So as I said, managed audit offers always, I want to emphasize that always include a pre-filed agreement. Actually, Bobby Kay has helped us enhance that agreement a little bit with her great feedback. So it's not perfect, and it's always evolving, and we're always willing to hear your feedback. So if there's something we could be doing better, please let us know. We have standard agreements. They're not individual agreements, except for the pre-filled ones. And each agreement has elements unique to the program and statutory references to each program. So once we receive your application, an agreement is drawn up. We send the agreement to the taxpayer, the representative, for signature, and the agreement is returned. The supervisor signs it on behalf of the secretary as the secretary's delegate. And then the commencement date of the audit will be the last date on which the agreement is signed by the parties to the agreement. So the agreement includes a waiver of limitations for the audit period. That's if you only have a look back period. It'll include the audit plan summary, the deadlines to present records. And I just want to emphasize that it's not a vehicle for refunds. There can be a refund period within an audit, but we prefer not to use this vehicle for refunds. If you want to apply for a refund, as Rosalina stated, you apply for a refund via TAP, and then we would review your documents as part of that process. I know for cost segregations, refund issues, refunds are high priority for many of you. So let's use the right tool for the job and use the refund application for that. If there is tax due in another period, certainly apply for a managed audit, and then we can combine all of that together. Next slide, please. So we've recently changed the remedies waivers. Really right now, we only have the remedy waivers included as 7126 and 7129.1. So it's a little more user-friendly. Next slide, please. There's a couple of different options for managed audit. Option A is generally when you get that managed audit offer from us, those are always option A's. The taxpayer prepares the work papers and returns it. If we've already established, reconstructed the records, most of the time we already have that information and we just work with you to file. Next slide, please. On option B, this generally comes from a field audit and is a little more complicated. An auditor generally works through work papers in a more detailed manner. And this is also the only option that closes a period. I want to emphasize that. Other audits do not close the tax period from being audited again, but option B does. Next slide, please. So, what can you expect from us? We will assign an auditor, we'll issue a letter, and work with you through that process, and everybody will receive copies of all of the audit correspondence. Next slide. And in the audit process, after we receive the application and the agreement, if you have an offer, you skip the application step. The managed audit will begin the last date on which the agreement is signed. The taxpayer has 60 days to submit documents, and then the audit assessment letter is mailed, and the taxpayer has 180 days to pay in full to avoid that interest from accruing. Next slide, please. Recent changes are, as I said, we're allowing managed audit offer to a greater number of taxpayers, including field audit. We have a strategic plan goal of 25% of our audits being converted to managed audit. Last quarter, we exceeded that. We're at 44%. So a huge thanks to the CPA community and taxpayers for jumping on that bandwagon. It really is a win-win for everybody. It's a win for the department. It's a win for the taxpayer. Just really helps us keep taxpayers in compliance. We also implemented paperless audit processes to limit travel for COVID, to limit touch points, which is critical now that we're seeing a surge of cases. So we can do in-person appointments in our district offices, but we also have Zoom appointments available if you prefer that. And of course, we're always available over the phone. We also are including audit staff into our call center. That's not included here, but I thought I'd mention it. We're doing tiered calling in our call center. We will have auditors in a higher tier. So if you end up having to call the call center and you have questions, they will get you to a tier that we have an auditor on that tier that can answer more detailed questions. Some of our call center staff doesn't have the expertise for like Rosalina, for example. But we will get more auditors on those lines in the coming weeks to make sure that we have that presence available for you all. And we also, great news for everybody is we removed the waiver for 7124 for administrative protests. So before it was a little bit of a gotcha when you come into a managed audit because you couldn't protest that, but now you can protest that. We really don't see too many protests or managed audits because we're working with you. There's no adversarial type of relationship, but we all make mistakes on both sides. And if a mistake is made, you now have an opportunity to protest that assessment. Next slide, please. Of course, we have their Manage Audit hotline here at 841-6216, and we are checking that voicemail daily. We're not on site right now, as I said previously, we're mostly teleworking, but we are constantly checking that voicemail, and we are constantly checking our generic email of manage.audit@state.nm.us. Of course, we have a website for managed audits that has some more detail, and the FY 404 provides some great detail, everything that I've included here, and then some. Next slide, please. And with that concludes our presentation.
Couple points on managed audits. The New Mexico's managed audit program is one of the areas where we in New Mexico excel from other states. Our program is so much better than other states' voluntary disclosure programs, primarily because of the 180 days to pay your balance due without incurring interest. That's a huge deal. That's 6 months. And that helps you figure out a way to manage those payments. And even if you're able to just make payments throughout that 180 days, it reduces the amount of balance that is eventually subject to interest if you're not able to pay the whole thing off. So it's really a wonderful deal. And in working with folks from the managed audit group, those folks are very helpful. They're very responsive, and they're just great to work with. They're knowledgeable, and I can't think of a single time where I've had an issue. So thank you guys for that.
Thank you, Bobby. I just want to add one point to that, is that and give you a statistic for field audits that we engage in. We only have a 23% recoverability for field audits. Most of those go into long-term collections. For managed audits, our recovery percentage is 86%. So we are seeing success, and we don't want to call you and tell you that you have a liability. We don't want to put a lien on your property. So we want to keep you to the left of our continuum.
And the thing is, what it really is doing is it's providing additional revenue to the state so that we can provide the services that our citizens use on a daily basis. So I mean, it's a win-win for everybody. The other little kind of thing that I don't know that most folks realize, when you do what we kind of call the Schedule C mismatch, and that's when you get one of those lovely letters that says, hey, you filed your 1040 with a Schedule C, and it says you have this much income from this in gross receipts, but you never filed a CRS-1. What's up with that? And so if you've never filed CRS, you've never registered with the Taxation and Revenue Department, but you get one of those lovely letters, they do generally offer managed audit, but you do need to register for a business identification number before you can do the managed audit program. So just there's a little step in there that I know a lot of folks that I work with don't always remember. And I know sometimes I forget too when I'm helping them. So
great point. Thank you, Bobby.
Thank you guys so much for your help, and I know those of us in the construction community have there was a rough few years and bad communication with folks in the Taxation and Revenue Department, and you all have made a concerted effort to make things better. So thank you for that.
Thank you, Bobby. We're at the table and we're here to support you all, and anything we can do, please let us know. We want to have a positive relationship. So thank you for inviting us to ensure that happens.
So before, I was going to touch a little bit on state cost segregation stuff if the audience would like that. But before I do that, since we have you guys here, I want to make sure that we've addressed all questions from the audience with respect to destination sourcing and the new TAP process. Are there any more questions out there? Don't see anything coming in on the chat. So, and if you guys do have questions that come up later on, do you have their contact information, or you guys are welcome to funnel them through AGC or through me, and we're happy to get information from these folks on the presentation today. So a quick update on, I know there have been some questions posed about the whole state cost segregation process. And for those of you that aren't really familiar with what that is, federal income tax has a technique where you can have a construction project, or you can look at a real estate property that a taxpayer owns, and you can segregate pieces of that property into tangible personal property items and real property items. And tangible personal property items don't mean construction materials. It doesn't mean lumber. It doesn't mean nails and drywall and all that stuff. It actually means items that could potentially be a desk or a chair or a built-in bookcase or floor coverings or wall coverings or window coverings. Those are some of the easier items to think about. In New Mexico, again, we are unique in that we are able to minimize gross receipts tax on the construction projects of nonprofit organizations or governmental entities, or those projects that receive industrial revenue bonds. I can't think of another state that has the ability to do something like that, but we do because of our unique gross receipts tax structure. And so new law, I guess the legislature made some changes to the statutes under 7954 and 7960 relating to deductions for nonprofits and deductions for sales to governmental entities, and that's sales to nonprofits with respect to construction projects. And those changes were made a few years ago. And, you know, we're all learning as we go along, and the Taxation and Revenue Department set up a special group of folks that are focused on working through these projects with taxpayers, with construction, the general contractors who primarily are the reporter of the gross receipts tax and the reporter of the deductions related to these projects. Even though it's the owner, the nonprofit or the government or the IRB recipient that is the beneficiary of this thing, that the contractor is the one that has to do the reporting and is ultimately by law liable for any kind of inaccurate reporting. And so some of the questions that have popped up from people who do that kind of work like me, and from taxpayers out there, from the construction community, and also from the owners, from the nonprofits and the government's entities, is what constitutes supporting documentation for the deductions that are being reported on the general contractor's gross receipts tax return. And that's, you know, there's a variety of different options available. And if, you know, those of you who popped in early before we started the presentation, we were having a little discussion about that. And it basically boils down to the concept of alternative evidence. Alternative evidence rules were changed. Was that 2018 or 2019 legislative session? And basically what that says is you can use an NTTC form to substantiate the deductions that you are taking and reporting on your business, on your gross receipts tax return. Or you can provide alternative evidence that's, and the words are acceptable to the secretary, to support the deductions that you're reporting on that return. And so alternative evidence, I mean, things that I do, when I'm doing a cost segregation, state cost segregation study, things that I have found useful is to visualize how am I going to eliminate questions about what it is I'm reporting. What can I do to lead the auditor by the nose and so that they can see what I'm seeing? If it goes to the attorneys in the protest bureau, how can I make them see what I'm seeing? And so some of the things that I think have been helpful in the past is to provide some written information that describes what it is you're doing. And in that written information, provide a reference to the federal income tax case, because cost segregation for federal income tax purposes is primarily based on case law. It's not written in the Internal Revenue Code. It's not written in Treasury regulations. It's based on cases. So for the most part, if you are saying, hey, this floor covering is tangible personal property, you write up something that says, for this building, this is why we think this floor covering is tangible personal property. And this court case, the income tax case, supports that decision, that position that you're taking. And by the way, here's a photograph of what it looks like. Some of those stuff that's a little bit more complicated is when you have a piece of equipment that supports what is done in a building. A good example is a computer. You have a computer in a research facility that is owned by a governmental entity. And that computer is fine. It's there, but it's not able to operate efficiently if it doesn't have access to an electrical cord or electrical plug and wiring in the walls, or to the ability to get Wi-Fi connections, whatever it is that's going to make that computer operate the way that it's needed to support the research that is done in that building. And so you need to be able to describe why it is you're doing that, support it with some relevant case law from the federal income tax side. And the changes that were made a few years ago to those New Mexico statutes reference the federal income tax rules. And so that gives you the ability, you as the taxpayer or the professional that's helping the taxpayer get these benefits from state cost segregation. It helps show why you're taking the position that you're taking, and then providing photographic evidence. I've always said a picture is worth 1,000 words. So if you could show why something works the way it does, then that really will help the tax department, who's not familiar with this property, that you've looked at the drawings, you've looked at the pay apps, you've gone out and done a site visit. It's just in your head, you know what it is, but you need to be able to communicate that in some format. And so I think that kind of information, if you're able to provide that in your report, or if you filed a refund claim to get these deductions applied to that return and get the gross receipts tax dollars back that you're going to share with the nonprofit or the governmental entity or the IRB recipient, you need to be able to prove when you file a refund claim why you deserve that stuff, why you deserve those dollars back. You can't just assume that the tax department is on board with whatever you said because you said it. They are stewards of New Mexico's tax dollars, and they need to provide and their fiduciary responsibility to New Mexico's taxpayers by asking relevant questions. And I know in the past, we've had some situations where the tax department was a little bit overzealous in their desire to do that. But I believe that the folks we have in place now are wanting to help taxpayers. And so it's a matter of, communicating and trying to figure out a way to show what's in our heads and why we are thinking the way that we're thinking. So I welcome any of y'all to add anything to what I've said here.
Thank you, Bobby K. I think that was a great description from the practitioner's perspective. And, I guess I don't really have anything to add other than just cost seg is very situational. Each project is different. And so, we try to take that into consideration in evaluating evidence submitted to support that document, that deduction, particularly 7954 and 7960. Aisha, do you have anything else you wanted to add there?
I think she said it extremely well. I just put a comment in the chat, well stated. Thank you for always being kind of that go-between for us, Bobby K, and for being so positive and really pointing out the fact that, it's our fiduciary responsibility. And I will admit wholly that there has been some overzealous auditors in the past that really, took that responsibility too far. And so we're working on, like I said, staying on the left of the continuum. And this is a great example of how we're trying to do that. And we're here to hear from all of you and to hear your perspectives. And the only thing constant at Tax and Rev is change. So we're constantly changing, and we love to hear from you, and we love to make changes to make it better. So we can't make it better without your feedback and your help and your support. So we're at the table. Thank you.
So I just noticed there is a comment in the chat, and I can't read the whole thing, but it looks like it has something to do with engineering services. Can you guys see what it is?
I can read that for you guys if you'd like. It says, will there be a similar presentation directly related to engineering services and how to segregate them between standalone versus construction related services?
I think that's for me. We don't have any such things scheduled at the moment, but certainly if there's an interest in the community from hearing from us on that, we can arrange something.
So yes, please let us know. Maybe reach out to Dana or Kelly here at AGC, and let us know your interest in putting something together like that, and we can absolutely be the liaison between the groups that want more information on engineering and maybe architectural services, and just do a follow-up. I think it's probably fair to say that as you all are starting to process and see the July 2021 reports that are coming in, there's going to be more information available about how the system is working, and is it achieving all the results that you all imagined, and what changes do you see that may need to be made. And so, having a follow-up presentation might very well be something that's welcome.
Thank you, Bobby K. Yes, absolutely. We would be delighted to come back anytime, and hopefully we'll be in a position where we can come in person. And we always have the virtual option as a backup. And I'm a real proponent of the hybrid approach, because I think it eliminates geographical barriers and just makes the material and the information more accessible. So yes, absolutely, we'd be delighted to come back. And if there are specific topics that you'd like us to address, we can certainly work on putting together materials. We also, as Dana mentioned at the beginning, we've recorded this presentation, and we do plan to post it on our YouTube channel. We'll do a little bit of post-production and editing, and then we'll put it up on YouTube for everybody who wasn't able to join today, but is interested in reviewing this material. I also will send the presentation itself to Dana to distribute to those folks who indicated in the chat that they would like the slides. So with that, I don't think we have anything else. We're happy to stay on if there's any more questions. I don't think I see anything left in the chat. I can also do the demo of Speedy if anyone is interested. You got to see it on a slide in Aisha's presentation. If you want to see if we can stump Speedy, we can try that. Just a caveat there: be gentle. He's new, he's learning still. But every question we ask him is a new learning opportunity for our little Roadrunner. An email with the YouTube link. Sure, it's going to be posted on our New Mexico Taxation and Revenue YouTube account. We can post a link here in the chat to that YouTube channel. Charlie, are you still on? Can you put the YouTube channel in the chat? Okay, I think I see it looks like Charlie's on. If you're hearing me, Charlie, if you can put the YouTube link in the chat, that would be great. Okay, and I see your message, Dana. Sure, we'll figure out how to get the recording moved around. Is there interest in seeing TAP live in action? We can do that if you'd like. I don't see any takers, so I'll let you experiment and play with that. You saw where he is. It's in the top right-hand corner of the screen, and you just click on the little icon of the Roadrunner, and it'll open the chat bot, and you can experiment with asking questions. And please do report incorrect answers if you're getting information that doesn't make sense or seems wrong, because as I mentioned, it's learning as more questions are asked. So reporting incorrect answers or answers that don't make sense is really important so we can improve the effectiveness of that tool. Okay, great. All right, I guess we're ready to conclude the session then. I will go ahead and stop the recording. Thank you all for your time. We really appreciate it.
Well, thank you guys for doing this for us. Really appreciate it too.
Thank you, everybody.